The Dow Jones last night had a 500-point range, and around with about 3 or 4 hours left to trade, the market reversed heavily off its highs. And if we just zoom in and have a closer look at the price action last night, so this is what I'm referring to, where the market opened near the prior session close, rallied up, and then reversed almost 500 points back down to the lows there. I think this is sort of consistent with these type of abrupt corrections in the market where you get 2 or 3 days of recovery and then probably further downside is our concern for US equities from here. If we have a look at how the XJO is responding, you can see similar type of pattern where we've had the sharp sell-off from 61.50, rallied back, found resistance again at 6,100. Now we're back down at around 5,800 points. We've had a small bounce, but it's failed to hold on to that, and we're seeing sort of further downward pressure here. And I think that is largely a result of the banks. If we just have a look through the four majors, so we can see here CBA, the trend is clearly still on the downside. Over the last couple of years, CBA is making lower lows and lower highs, and the algo engines created these recent short signals there. The other bank names are probably a little more bullish in that they still have a higher low formation, but you can see Westpac's consolidating and testing the lows there. If we have a quick look at ANZ, same, it's traded sideways over the last 12 to 18 months, but testing the lows at the moment. NAB. So again, the structure there is quite bearish with lower lows, lower highs, and it's testing to the low of that $27, $28 range at the moment. In the regional banks, if we just have a quick look at Bendigo and Bank of Queensland, to me this pattern here in Bendigo looks quite bearish, lower lows, lower highs. And unless Bendigo really traded back above $12, I'd be a bit cautious, especially with the backdrop that we looked at the beginning of the recording with the US equity market and where the Dow Jones. So very cautious on the regional banks at the moment. Bank of Queensland, similar pattern there. But probably out of all the banks, I think Bendigo probably looks the most vulnerable. But as a sector, it seems like the banking area is probably going to struggle a little. If we have a look at the big, the major miners, say Rio, BHP, I think this is the area of the market that's probably likely to find more buying support. But if the US has a sell-off, we may see Rio sort of test this $70 level, which would be a good buying opportunity, I'd imagine. In the case with BHP, a combination of iron ore being under pressure as well as energy prices, you know, if we saw that next leg lower, we'd be looking for support in BHP around that sort of 27.50 level. Let's just have a quick look at profiting from the US share market having another leg down. So BBUS is one way of doing that. We've seen this spike from $4.50 up to around $6. It's now trading at around $5.30. If the Dow has that next leg lower, we'll see BBUS spike higher. Domestically, the equivalent of that short ETF. So for those that missed the recording earlier in the week, the BBUS is a instrument. It's an ETF that trades on the ASX that goes up in value when the S&P 500 falls in value. The equivalent for the Australian market is the BBOS, and I'll just bring that into screen here. And we can see as the XJOs sold off over the recent week or two, the BBOS was originally trading sort of around 1450 when the index was up at 6150, and now you've seen BBOS rally trading up at around this 1650 level. I don't think it would be unreasonable to think that it could trade up to around 1750 as the US has another move lower. A couple of other ETFs that the algo engine triggered in yesterday's signals. We'll just bring these into view. The Market Vector ETF, which is a broad-based exposure to the REIT sector. I think at around $19, this looks interesting. I suspect that these bond proxies start to find some support in the very near future in the market, if not sort of off today's levels. So the other alternative to the MVA is SLF, which is the Spider ASX 200 listed property. So the same thing at around sort of this $12 level there. The algo engine's flagging the pickup in volume, and we may start to see support for that. Consistent with this theme, we saw yesterday that Westfield was added into the ASX 50 model portfolio, the ASX 20 and the ASX 50. So as the algo signals triggered the higher low here, interesting that Westfield's closed the gap back down there to 865. So we're of the view that we're likely to see support begin to develop for Westfield around this level. If we jump into the model portfolio, have a quick look at the top 20, you can see here that Westfield, so days held, so we've been holding it now for 1 day. It was added at the close yesterday. So that's how. So when you get that email saying that a stock's been added or removed from the model, you can come into these model portfolio pages and you'll see either the addition or the removal to the models. Just to finish today, let's have a quick look at a couple of stocks. So Amcor is finding buying support today. It's rallied off that sort of 14.25 low that we've been watching. Westfield we've already covered. Today on the blog, there's more detail around Newcrest Mining, so maybe take the time to have a read of that article. But we're thinking that gold is very close to finding support here. And Newcrest was added to the model portfolio off the back of this algo buy signal here. So have a read of the added research that we've provided on the blog there. And just a couple of other quick names to finish with. Tabcorp, so they came out with their earnings result. The concern here is that the integration with Tats Group is going to take longer than the market initially expected, which just means that the synergy cost savings from the merged entities takes longer to flow through. We think once the market digests that, there's further upside for Tabcorp. So still of the view that this is a buying opportunity. Maybe watch these short-term momentum indicators, but somewhere around this range that it's trading at the moment. If the US market's weak over the next day or into next week, we may see Tabcorp a little bit lower, but that just sort of strengthens our resolve that it's a good buying opportunity. AGL, I thought the result was okay with AGL, but broadly with all areas of the market at the moment, anything that's sort of seen as a bond proxy, so fairly defensive utilities, REITs, infrastructure type businesses have been sold off. But the view is that we're getting close to sort of support within those yield-sensitive names. Just have a quick look at the watch list and see what's been moving in the market. The Yank is another way that we've been playing sort of weakness in equity markets as money flows back into US dollars as a safe haven. The flip side of that is the Aussie dollar comes under pressure, and we've been buying the Yank, which is a short position on the Aussie dollar, and that's been turning into a very profitable trade for us. So as the Aussie dollar moves lower, this instrument moves higher in value. We could see this maybe testing this 1350 level short term. So that's the best performing ETFs on the market today. If we just jump into the watch list and have a quick look at where the activity is in the top 50 stocks. So you can see Rio's off a little, and that's really just off the back of lower iron ore prices. The actual earnings result for Rio was very good, and they announced an additional $1 billion share buyback. AGL we've covered, BHP we've looked at, Woodside Petroleum, I think sort of anywhere around this $31, $31.50 is actually good buying for Woodside. Computershare, we're leaning on the short side of that. We think the upcoming earnings result will disappoint. Origin, we urge clients to put that in their watch list. If we were to see that around 8 to 8.50, it's a good buying opportunity. Sydney Airports, I think keep that on your watch list. Anything below $6.50 is a good buying opportunity there. ASX, I've been speaking about that over the last week. I think that's a good defensive buy, right? Sell covered calls, strip out the dividend and the franking credit. If we have a look at what's been performing well today, AMP's result came in a little bit better than market expectations, as did NAB. Telstra, Sonic Healthcare, we've chatted a fair bit about that. Brambles, I think that holds up all right. I've been speaking about that as a buy, right? So owning it at these levels, selling the $10 calls, and turning that into a sort of 10 to 12% annualized cash flow. Insurance Australia Group's one of our preferred buy rights, owning it here, selling the 750 covered calls, again turning sort of that 5-6% dividend into 10 to 12% cash flow. Interesting that Lendlease is holding up well, so that's a chart that's worth just taking a look at. Medibank Private, I think this is one you want to put on your watch list. I think that's getting down to a level that'll present a good buying opportunity. And the other ones that we've covered this week being Stocklands and Wesfarmers. Thank you for listening in, and I'll speak again tomorrow.